Hello, everyone. Welcome to the Forte Financial Podcast. This week, we have quite the treat. Here we have Mr. Keith Bisignano, who is the owner and operator of All Pro Appraisal Management Company. And this week's podcast is fully focused on the whole appraisal process, which is quite fascinating. There's been a dramatic amount of changes over the years since the crash of this business in 2008. And I thought it would be good to hear it from one of the best there is in this business to help share some of what's going on and how we as loan officers deal with the situation, navigate, and we'll get into it. Keith.
Hey, it's an honor to be here. Absolute honor to be here. I've watched the podcast many times. I told you, I think it's fantastic the way you do it. If the mortgage thing doesn't work out for you, I think you could replace Al Michaels. You know, I think he's riding off into the sunset soon. So you do a great job. Really, I'm honored to be here.
Thank you.
Absolutely.
Thank you. So this whole podcast really started with, in my personal opinion, the real lack of education all around. You know, I watch other mortgage professionals that have podcasts, and where a lot of it's great, you know, there's a piece of it that I'm not seeing. Like, I don't usually watch many podcasts and say, okay, wow, I learned that, or this was great, and I didn't know that, and that was awesome. And I feel like we have so much to share, from educating borrowers, current homeowners, realtors, you know, and other loan officers from other companies. As you know, we're trying to recruit, something we've talked about. And, you know, this, I think, having you on, it will be incredible, especially for the realtors. I mean, borrowers, too, that, you know, they'll hear things about the appraisal process, but most of the concern and issues that come up tend to be with realtors. Because let's back up, and you know, you're the expert, so I kind of want you to explain better. You know, back prior to 2008, the whole appraisal process, I mean, yes, there were appraisal management companies, but most people didn't use them because it wasn't a requirement. Previously, you know, the loan officer, call it myself, I would, you know, call up the appraiser directly, speak with the appraiser directly, order an appraisal, you know, for the loan. They would contact the borrower, the realtor, to go do it, send us back the report. Well, you know, in the crash, it was found that loan officers were manipulating appraisers and, you know, asking for values, suggesting values, and a lot of mortgage fraud was happening due to some of the bad people that were in the business, which luckily a lot of them are flushed out now.
Now they just moved on to doing it to the AMCs.
So now you want to just explain what happened with HVCC and heirs and explain how we got to this point, and then we'll talk about what's different.
So, as you know, we've been in the business forever, you and I.
Oh, yeah.
This industry pre-2008 was the wild, wild west. I mean, let's say what it was, right? Everybody, the loan officers were talking directly to the appraisers, not even branch managers. It was really loan officers contacting the appraiser directly, and they could use any appraiser they wanted, which, you know, we're old school guys. You know, we worked that way, but it wasn't necessarily the greatest thing, not for the appraiser, because if they didn't come into value, that was it. They're cut off. We're not working with you anymore. So we don't do that. We don't even cross that line. There's a special line in the sand when it comes to value that you can even speak about. We talk value very, very infrequently. We ask, is it possible? If it's not, you're safe. So appraisers really who fought the AMC tooth and nail in the beginning are starting to embrace them because now they know they're protected. If we don't come into value, it doesn't necessarily mean we're not going to work with them again, you know? So I think personally, and I was even against it because I was doing appraisal work. My father and I, as you know, my father's been in the business for 40, 50 years almost. I mean, a long time, and that's how I got into it. So he taught me so much, and he taught me the most important line that I've ever taken from him, and I actually got a sign made and had it on the door of my office for a very long time. So every one of my employees who walked into the office would see this sign, and it's, "You're only as good as your last appraisal." You could do 99 great appraisals as an appraiser back then. You do one and you don't come into value and that loan officer doesn't get their commission, game over. They didn't use them anymore. So the AMC's thing, very important process that I now understand and embrace. And obviously I own my own. So it's, how do we go forward with these things? And honestly, it's a necessary piece to everything. Now, there's always going to be the age-old battle. You mentioned this as well earlier. There's always going to have the age-old battle of the realtor versus the appraiser. It's just the realtor's dealing with value and the appraiser's dealing with value. The separation between them is the black and white version of value. The appraiser has to put value on paper and prove it. The real estate agent doesn't have to do that. The real estate agent lists a property, they look at a few things, they list the property and say, hey, we could sell your property for this, which isn't necessarily wrong. It is possible. You're only worth what somebody's willing to pay for you. But when you're using the bank's money, like come to Jamie Forte and get a loan, if you're going to use your money to finance this loan, we got to make sure that it's worth it, unless you're coming with cash. So that is why when an appraiser doesn't come into value and the real estate agent you could definitely sell it for this. This guy's willing to pay for this. And it's just not the way it goes.
So we it's thank you, because that sheds a lot of light. I personally absolutely hated HVCC, which stands for the Home Valuation Code of Conduct, which was the original law that came in place that prevented loan officers from dealing directly with the appraisers, where we then had to find a management company like All Pro. Although I wish All Pro was around back then, because the problem is when we started, I'll tell you what the problems were. We started going this route, and we had no idea who the appraiser was. And listen, for me, I didn't want to speak to the appraiser because I wanted to suggest a value or tell them what to do. I would never do something like that. But there's also a difference between an appraiser who understands the market area, understands certain things about the types of deals that you're sending. I would choose appraisers that I knew were very competent to do a fair appraisal, do the right thing, and understands that market. Yet some AMCs, someone like the large, and I'm not going to name names, but some of the larger AMCs that are huge, they'll send an appraiser in, let's just say Ridgefield, Connecticut, to do a Ridgefield appraisal. They'll bring them down from New Haven or Waterbury, who they don't do deals regularly. They don't know necessarily, this street is worth a lot more than this because that, or this has a certain school district that this one, they don't necessarily see all of that. They don't
understand the neighborhood.
And then all of a sudden we have an appraisal that really got messed up because they didn't understand that. And, whereas if someone who understood the market better would have done better. And then we get the realtors yelling at us like it's your fault, you picked this appraiser. So we had nothing but issues originally. Listen, some were fine, but it was like a coin toss. It was like half the appraisals. And then customers were pissed and we're like, I'm sorry, we have no control. So although we still don't have that kind of control, it has shifted to, we finally obviously have found All Pro when we've come in contact. And, I know that your appraisers that you have chosen for the areas, they understand. You're not sending someone to Ridgefield that you're not confident knows Ridgefield and isn't going to do the right thing.
That's the important thing here, right? You have faith in me.
Yeah.
So the way I built my AMC is different from the larger AMCs as we've spoken about.
Yeah.
So you got these big guys who don't really, the relationship portion of it, they just they don't care. Mm-hmm. The way I built my AMC was I always wanted to stay, even though we're getting big, we wanted to stay small. So we wanted to keep that small town mindset. Every one of my appraisers we have relationships with. And I'm not talking relationship, just business. I mean, we are talking about family. I want to know how your day's going. We get into 45-minute conversations with these guys and women all the time. They're good friends of mine. I don't consider them employees or 1099, whatever. I consider them friends. So that was the most important thing when I started my AMCs. I wanted to create relationships that Jamie Forte would trust. So he knows when the appraisal comes to me, I'm not just sending it to anybody. I'm sending these things to my friends. And in the end, if there's an issue, they're going to let me know, and we're going to square it up and figure out and get to the bottom of it. And in the end, hopefully get this deal closed. But there's always going to be that time. Listen, it's not worth it. Listen, there's a situation in this house. We can't do it. But you understand that. But at least you trust that when it comes to me and I'm sharing that with you, okay, if he can't get this done, especially with his relationship, because everybody wants the deal to close. But if he can't get this done, at least I know he did everything he could.
100%.
And that was my goal from when we started. It's let's go. And get as much of this stuff closed as humanly possible.
Yeah, no, and you hit the nail on the head with, like, anytime something has come up, I know that was not an appraiser did something stupid or that was, like, not necessary. I know that it was necessary. I know it was because, and like I said, values don't come in, often, but that's because they're not there. And I don't want anyone to push a value. I would never ask for it. And I know you don't ask for that.
Nope.
So it's a matter of, doing the right thing. And if it's not worth it, I know confidently, say, hey, it's not worth it because it's not worth it. It didn't not come in because the appraiser screwed up or missed something. Now, if you have comparables that you feel were better than what the appraiser used, by all means, please provide them.
Bring them to me.
It's possible that something was missed,
Absolutely.
and then I'll send it to you, and you'll be happy to
how many
submit
times
a
have we done that?
reconsideration of value. Yeah.
So my appraisers, and here's the other big difference with the big guys compared to someone like me. You get me a reconsideration of value. Remember, an appraiser doesn't get paid for a reconsideration of value. According to them, they finished their job already.
Right.
Okay. So you send to the big AMC, they're just going to send the reconsideration out to the appraiser, and hopefully the appraiser looks at it and gets it done. When I send the reconsideration out, I'm sending it to a friend, a relationship. They're going to look at it, and they're going to be like, hey, Keith, you're right. I looked at this. There's a comp that I missed here. Let me get it done. And I'm going to have a conversation with them. I never ask them to do anything that they're not comfortable with. I would never do that. Coming from my side of things where I was an appraiser, I would never do that. Right? So there's a fine line. You got to be very careful in this business because you could lose your shirt.
Of course.
And appraisers can lose everything. They can lose their license, and then all of a sudden we can't use them anymore.
Oh, and that's why we're all here doing it as long as we have, because we do things the right way.
Correct.
And I just want to touch on something you said really struck a chord. So again, before we found you and you had your AMC, we were dealing with the big guys, and every time there was a problem, and then I would do a due diligence. I would actually call an appraiser friend of mine and say, hey, this, because I couldn't call the AMC and talk because they wouldn't even talk to me.
They don't even answer.
They don't even answer.
Yeah, I remember.
So I'll call a friend of mine who's an appraiser and be like, hey, Chris, would you mind this is the appraisal that this AMC did. Is there better comps that they could have used? Because this doesn't look right to me. Would you mind taking a look as a favor to me? And then, he'll come back and say, honestly, yeah, I wouldn't, if this was my appraisal, these comps are better for this reason and that reason. So I would take that information and submit a reconsideration of value. And guess what? These appraisers would have such a chip on their shoulder because you said you messed up, you did it wrong, or these were better for this reason, and they don't want to accept that. So that's the difference with you and your relationships you have with your appraisers. They're not going to be sitting with this defense. They're going to be saying, okay, let's take a look. Let's see if I can make this work. Or maybe I missed a comp that was better. No problem. And if it makes sense, they do it. And that's all we can ask for. We just want a fair job. And I don't feel like we're getting a fair job with the big AMCs. And with you and with All Pro, I know we are. And I know that if something doesn't work out, it's because it shouldn't. And that's, everyone's happy about that.
I'm going to go over the moon for my clients.
Yeah.
I'm going to do everything humanly possible.
It's a great point.
To make something
about
work.
the reconsiderations. Great point. Because it's
a big thing.
I actually forgot about that because I haven't had to deal with that in so long. But it was like every time we needed a reconsideration, I would even prepare the borrower and the realtor. I'd be like, listen, yeah, I'm going to provide these comps, but just so you know, they usually have a chip on their shoulder and don't want to be told that they messed something up or missed something or wrong. And I would say about 80% of the time, It was like, sorry.
And with us, because we've done plenty of them, how many times has they came back and looked, hey, you know what? He was right.
Most of the time.
Yeah.
Almost all the time.
And
because we don't submit if it wasn't legitimate anyway.
Yeah.
You know?
What's great is when my appraiser knows that there's no prayer of getting a value.
Yeah.
Again, we have that relationship. He's going to call me up. He's going to say, hey, Keith, just not going to happen. And then I'll call Jamie. Jamie, we're not close. And that's it. It dies there.
Yeah.
We know there's no need for a reconsideration,
Right.
but I'll say to you, if you get comps, he'll look at them.
Right.
We're willing to go the extra mile to check this thing out, make sure we can't get this thing done.
Yeah.
Absolutely. All the time. I mean, again, my team is not interested in wanting deals to die. I'm not interested. I'm not looking for individual files to just make money. It's not about that.
Yeah.
We'll make money just by having a relationship. It's more about making my client believe in us. That's what it's about. So when I'm working for my clients, and I have actually had an instance this week where, a client wanted my service, like there was a situation and the client called me up and said, listen, I'm sorry. We need your services. We appreciate what you've done. And we want to continue to work with you because we know sales will go down. We know, the bottom line is not going to look so great at the end. And I appreciated that because they get it. They get that we're not the bigger guys. We're not going to just, send one in. Nobody can talk to me. Nobody can communicate with me. Whatever it comes back at, that's it. It's not just about value. There's other situations as well that come up, and we're always going to be there to tackle these issues together. Doesn't matter how long it takes. Doesn't matter how many phone calls it takes. We're going to get to the bottom of it, and if it's there, it's there. If it's not, it's not. Game over.
It's the key you hit on there is the communication. The communication with All Pro is second to none, and that right. Just like with appraisal specifically, people are already on edge. Like realtors are already on edge because they know, the appraiser told me don't talk to them, and this and that, and so everyone's already on edge. The fact that we have communication with you and your team is just comforting. That we know that if there's a problem, we can have a conversation about it and see if there's a resolution. If not, like you said, if it's not, no big deal, But at least then, if we can go back to the realtor and say, well, listen, we did address it, and because of A, B, and C, it's not going to work out. At least then it's like, okay, all right, well, let's see if they can renegotiate the price, or this issue isn't resolvable. If they need to fix something, then they do it. But if it's just like, sorry, not talking to you, my appraisal was perfect.
It's not fair.
Like that is not giving the customer what they paid for. I'm not suggesting you have to come in at value. That's not what giving somebody what they pay for. It's communicating and at least responding to potential concerns or issues. Respond.
And that's why, and I've spoken to my appraisers, and I have people on my staff that have worked at the bigger companies who say it like, it's just not the same. They come to my company and they're just like, wow, we're completely different. We're all about the client. We're all about getting to the bottom of each individual file and figuring out what we're going to do. Yeah. That is what I do, and I will always do it. It doesn't matter how big we get, how many states we're in. We're always going to do the same thing, and it's never going to change because the moment it does, that is when I'm gone.
Well, it's funny because I talk about, not to get off topic, but I talk about that same thing. I have the same exact feeling and philosophy about my company where we're also a lender in a few states, but the biggest thing, if you watch my other podcasts, is we talk about how we're different than your non-bank lender competitors, how our pricing is different, how we can do much better deals, and we can do all these other things. But now if I grow too much and I hire too many people, now I become what I'm not trying to be. So exactly. I will never do that. If I have to change my whole mission because we're getting bigger where I can't give people the best deal and I have to hire all these other salaries that are going to require rates to be higher, I'm not doing it. I will not do it. I am so passionate about the whole model and just educating people and telling people, hey, there's a difference. Like the last podcast, we really kind of focus on trying to educate realtors on, are you sure that non-bank lender you're referring out is the best solution. I'm sure your loan officer is great. I'm sure your loan officer is very good at what they do. And they get back to you at 10 o'clock at night on Saturday. But if their rate's 0.5% higher than mine with the same, closing costs, how is that the best solution for that borrower? And that's our whole mission. And you just hit the nail on the head. I will not veer off of that either. And that's why we get along so well.
Yeah, oh yeah, absolutely. We've talked about it. We've had meetings and conversations and everything. And look, that's important. It's so important to me. Is I never want to lose that quality. I don't care how many people I have to hire to keep that quality. As big as we get, that's the most important thing.
Yeah,
that's what drove me into this business. Is even as the appraiser. Do you know what it was like contacting the bigger guy to find out what's going on in situations? It was impossible. So I can only imagine what it was like for the lender. You don't have that problem on either side for me.
Well, let's talk about, because this podcast, I would say, is mostly targeted towards realtors, so they can kind of see the difference when they work with Forte Financial and what they're getting on the on the appraisal end, because All Pro is our go-to. In 90% of our appraisals, we are able to utilize your AMC. Some due to restrictions we can't, but most about 90% of the time we do. So if you want to share a little bit about what the realtors can expect and the mindset of these appraisers and how to put them a little bit at ease on what's different about.
So we said it earlier, but I want to really drive this one home because there is that battle between the appraiser and the real estate agent. I do a lot of speaking at real estate offices, for my clients who ask me to do it. The main thing here is that the real estate agent has to remember is that the appraiser has to prove it, right? So it has to be in black and white. You have to be able to see it on paper, read it in writing on why a house is worth what it's worth, okay? So the real estate agent doesn't have to worry about it. So they're always worried, is this appraiser good? Do they know what they're doing? I mean, most appraisers are good, right? We may not agree with them all the time because what is an appraisal after all? It is an opinion of value. So everybody's opinion may be different. So that's why real estate agents are so concerned about which appraisers come into my property. What they have to worry about is they have to have faith in the lender and who the lender is trusting to go out there to do the appraisal work. And that is the most important part, if you ask me, in the dynamic between the lender and the real estate agent, is that appraisal situation, because they're always concerned, this appraiser doesn't like me, or this appraiser is going to kill my deal. No appraiser ever wants to kill anybody's deal because that doesn't just affect the real estate agent. It affects a client, it affects the lender, and it affects me as the AMC. So nobody's going to be vindictive. That's not what they're trying to do. They are trying to prove it on paper, and they may call you and ask you for help. Help them. Let's work together. Let's get these things done together. That's what I try to sell to real estate agents when I talk to them is we're a team. If we have a file that you're doing the loan on, they're selling the property, I'm doing the appraisal, I got hired to find the appraiser, and I get it to an appraiser. The four of us are going to work together to close this deal. That is the whole purpose of getting that file done, and it's for the client. They may be first-time home buyers. They may be, hey, we're buying our first home. It's a big part of their lives. There should be no feelings outside of that. People forget why we do what we do. It's not just about making money, not for me at least. And I know it's not for you. No. We've had 100 conversations about that. What drove you in this is helping people. So real estate agents sometimes, I think, escape that, right? They start to believe that every time this guy has done one of my appraisals, it's been bad. He doesn't like me. No, that's not the case. It may not just be worth it. So when you're listing a property, you want to try to, and I always said to real estate agents, it is such a good idea for you guys, not just to get your license, but to also take a few appraisal courses. Take a few.
Great advice.
Learn in those, like what the appraiser actually is going through on a daily basis when they're typing these jobs up, when they're pulling their comparables. See what they're doing. Talk to an appraiser. Meet with an appraiser. Ask for a walkthrough with an appraiser. Say, tell me about your process. Talk to them. They have no problem talking to you. Appraisers are dying to talk to somebody. That's the one thing I realized. They're dying to talk to somebody. They enjoy what they do, but it's a lonely job because what are you doing? You're going to do the inspection, then you're coming home and you're typing. That's your job. So talk to them. And I'm telling you, it will go a long ways. So that's my advice to the real estate agent.
So that's awesome. And that just brought up some questions. What about changes maybe in 2024? Any new appraisal requirements that you're seeing that realtors should be looking out for? Anything like that?
Well, I will bring up one thing that has been bothering me, troubling me a little bit in this industry that is coming up, and I'm sure you're learning all about it now as a lender, but short-term rentals.
Oh,
right?
Yes.
It's a big deal.
Yes.
It's changing everything, and realtors need to understand what that is, why that is. Now, you can't find comps for these short-term rentals on MLS. So if real estate agents can figure out a way to help the appraiser, because the appraiser has no way to really get comparables, let's help each other out. Let's not start firing and yelling and get into a bad place. Let's all try to help each other out and find these comparables. Help the appraiser. Not everybody knows how to do it. Explain it to them, which I do on a daily basis. But short-term rentals have entered our world, and I don't know if they're going anywhere.
So a good point. That's a great point, because now a lot of people watching maybe say, well, what how's that relevant exactly? And the point is, typically, and it's changed a lot on the lending end in the last couple of years too. Typically, most programs, like if something is a short-term rental, like it's an Airbnb, it's rented out weekly or daily even, that's not acceptable to use as rental income on a lot of programs. So, that has become a problem. However, programs are changing. They're opening up a little more because they realize that Airbnb, VBRO is becoming.
I heard Fannie and Freddie are about to approve it.
Yeah. So this is becoming more accepted, and so now, okay, it's accepted, but where's the appraiser going to get this information from?
It's tough,
and because your loan may not qualify if you don't have relevant information. So the fact that this is something that you guys are aware of, and you're able to work with realtors and help instead of the appraiser just putting something, okay, here, there's nothing.
I've had a lot of sleepless nights over it.
Yeah.
I'm not going to lie to you. It's been a very difficult situation. Originally, Fannie and Freddie, no short-term rentals. That's it. Now they're starting to change on that because a lot of the non-QM lenders are doing short-term rentals. Appraisers, for us, what we do, finding appraisers and finding somebody to actually do the job and create relationships with them, it's difficult to contact somebody and say, hey, do you do short-term rentals? And they look at, no. What are you talking about? And then you got to call the next guy. Hey, do you do short-term rentals? No, that's illegal. We don't do that. That's you need a commercial appraiser for that. That's some of the stuff that we hear on our side when we're looking for an appraiser. It's very difficult. We know now, because we've been doing it for about 8 months, we know now the appraisers who are willing to do it, and they understand the whole concept that these aren't Fannie and Freddie loans. They will be soon. So all those appraisers who don't get it have to learn it very soon. But they understand that, and they're doing non-QM work, private deals, and they're getting it done. And your company's had a few. It's a new thing.
It is.
It's not going anywhere. And it's actually a pretty cool concept, the way they're lending on these, which you can speak more to than I can.
Yeah, so just, while we're on the topic, for the realtors listening and borrowers, if you're an investor, if you're a real estate investor and you're familiar with the DSCR loans, debt service coverage ratio loans, where there are no tax returns, where the loan is based mainly on the principal, interest, tax, and insurance payment, versus the rent. Now, the rent is, it depends if there's lease, if it's not leased. Lots of times if it's not leased, in most cases, that can be a good thing where we just get what the market rent would be for that. And in that case, it's based on long-term. But, there's a lot of calculations, and it's the appraisal is everything in those deals, because if you get an appraiser that, let's say it is short-term, and they're just like, no, this is like $2,000 a month, and that's what they think it is, even though, you can support, well, look at all the VBRO, rental data from the last 2 years, and that's something that your appraisers are willing to look at and consider for that, which could make the difference in a deal happening and not happening, and that's been huge. So like the short-term rentals, what we'll typically accept is a 2-year history. Plus, they may want to see, hey, like right now it's February. We want to say, hey, let's see what's rented out for this upcoming season. Let's say it's a vacation type of property, like by the beach or something like that. We want to see how's it rented out for the season now, and what are the last 2 years, and they'll do like an analysis of that as long as the appraiser supports that on the appraisal. But if they're like, no, this thing can only rent for X amount, your deal's dead.
What's crazy is the numbers that you're getting. I mean, especially in Florida.
Yep.
In certain areas like South Carolina, we've done some in South Carolina and Myrtle Beach, I think. Long Island, Jersey Shore, Pennsylvania. You're getting a lot of investors buying properties in these vacation areas, and they're actually getting these numbers. So it's not like,
right.
But you look at it, and from our standpoint, we're used to doing long-term rentals, right? Like, we got a lease, 12-month history, you're paying $3,000 a month. Now you're seeing, they're actually renting these things out for $8,000. They're making about $8,000 to $10,000 a month on these properties, and it's real numbers. So that's why I actually like it, for the aspect of, hey, they're actually getting these. This is the money they're making. Why not lend on that? So I don't have a problem with it, but it is making things harder. So we just all got to get caught up. It's like anything else. I mean, how many times has this industry changed to the point where, it just changed recently, 2020, 2021, we couldn't even breathe. Now, 2022, 2023, it really slows down. I have a feeling this summer coming up, it's going to get crazy again. Maybe not 2020, 2021, but it's going to get crazy again. So, this market's constantly, it's like the ocean. And there's all new products and things and themes, and they're all coming up, and they're going to hit us in the face. And we got to move and adapt as quickly as possible, or we're going to be left in the dust.
Well, that's another thing we share is that I always embrace a change that's coming and never try to fight it, because it's just not worth it. You have to be able to adapt to new stuff coming on and not be afraid of it, and just, hey, you learn as you go, and that's it. So,
well, that's why we're still here.
Yeah.
I mean, listen, we're old men now.
Yeah,
so
I know. We are.
This business ages you quick, right?
Yep.
So,
oh yeah.
I mean, but that's why we're still here. We're still here because we have adapted, and this business has changed.
Right.
I mean, could you think back 20 years, 25 years ago when you started? How different?
So I'll tell you what happened 25 years ago. Your father was the first appraiser I ever used when I started 25 years ago in 1998.
Wow.
And he would do an appraisal, and then, he would literally overnight 2 printed copies with glued on photos on pieces of paper. I'm like, I need 2 copies.
I remember those days, yeah.
And then we had to overnight it to our lender. It was crazy. Nobody even used email.
Nobody
even used email.
We had a typewriter. So we would put the 1004 or the 1025 in the typewriter and actually fill it out that way.
Yeah.
And our flood maps, we had this weird looking computer thing that you look through and you move it around until you find your zone, and that's how we got all this information. So it was actual office work until digital cameras came out. I mean, it was, when I started doing this, we didn't have GPS. There was no GPS. So when I'd have to go to a location, and as you knew, we went anywhere, me and my father. We did whatever we had to do.
Yeah.
So you would go into a location, I'd have to get the whole Hagstrom maps, right? And glue them together or tape them together and just have like a highlighter. This is my route. All day, and I'm shooting a comp over here. I'm shooting a comp over here. It was completely changed.
It's crazy
this game
when you
has
think about it.
completely went haywire and completely different. So, and that's the main reason, like, I went into lending. As you know, we've had this conversation. I didn't want to do it anymore. It was too much for me. It was like, this is crazy. I can't do these stuff anymore.
This isn't G-rated. It's all right.
Oh man,
Yeah.
but you know what? You give me a way, and I'll just start. My tongue will get loose real quick. So let's just keep it at
Keep it G.
Yep, let's keep it G.
Yeah, no, this is good. I mean, the whole point is just to educate the realtors and potential home buyers, and hopefully anyone listening to this that's a real estate investor or looking to get into real estate investing. The whole short-term rental thing we spoke about is huge for getting a loan, especially if you're looking at the no income verification DSCR type of loans where we utilize the income and the debt and the property. That's everything aside from your credit score and reserves, what you have in the bank post closing. It's the income, the debt, and the income. If you don't have the appraisal that supports that, it's huge. So investors definitely give a call if you want to learn more about that. But it's
so many
it's
different
huge.
options.
There's so many.
So many. Yeah. It's really changed. Where there wasn't that many a few years ago for an investor, it was like you're buying an investment property. That's it. You're getting the investment rate. Now there's, the amount of options that have changed on your side. It's, and look, we're all just trying to catch up, especially on the appraisal side, as we've spoken about.
A lot of people, you read through some of the comments on like the TikTok, and there's a lot of negative comments I see when we talk about these no income verification loans. They say, 2008 all over again. So I just want to address that while we're on the topic, because
I think that's good. That's very important.
It is not at all to be clear. In 2007, the types of loans that people are talking about are, we have a 580 credit score where you have somebody that is there's no job on the application, or they state a job but there's nothing verified. They put nothing down, zero down. They have a seller credit. The seller's paying their closing costs, so they literally have not 1 cent into the property. And we have no verification and they're going to live in it, that we have no verification of any income that they have any ability to pay this. It's all paper. That was 2007. That is why we crashed. Now, when we talk about a no-income loan, it's somebody putting down 20, 25, 30, maybe 40%, excellent credit, and has plenty of reserves in the bank, and has,
reserves are everything
rental
now.
income that is the same or more than the expense in the property. So how does that loan not make sense? I mean, it makes sense because it is an investment property and we have verified rental income. It's not anywhere near as risky
as... The first
thing
people need to understand is how regulated our industry has become.
Yeah.
They don't understand because they still just look at products and they say, wow, they just lend on anything. It doesn't work like that. You only get the money if you deserve the money. That's really what it comes down to. And from the appraisal process, I mean, I didn't exist, right? And AMC didn't exist previous to in 2007. Not really. I mean, there may have been somebody trying something, but AMC's really came on the scene after probably 2010, right?
Yeah.
I think, I remember Nationwide being the biggest one, and they were the first ones out there. Mm-hmm. So AMC's didn't exist. We now exist. There is a lot of regulations and rules and appraisers entering lists and us getting condemned, if you will. And if you do something wrong, they're going to catch you. That's just the way you have to have that mindset when we go into it. You cannot cross that line. You have to do things the right way. If you don't do things the right way, you will not last in this industry. So, and that's one thing I pride myself on, and I know you do as well. I'm going to last because I'm not willing to do anything that you're not supposed to do. So that's the one thing to those comments on TikTok. We are heavily regulated. We have eyes everywhere.
Yeah, no, it's true. So, we're not lending. I personally wouldn't even provide a loan to a borrower that I truly feel wasn't capable of paying it back. And the rules that have been put in place Pretty much. Listen, there's things that you can't see on every deal. You could look at a person on paper, they look perfect, and you don't know, God forbid, they have a major gambling problem or a drug problem behind the scenes that they get into trouble. But that's you can't see that on paper in most cases. So aside from that, we know if a person's going to be able to pay. Unexpected things happen, but those outliers, it's not 2007 again. I was one of those people back in the day when everyone was trying to do, these 0% 580 credit score, no doc loans, making up jobs. And watch The Big Short. If anyone who's watched the movie The Big Short, I was a sales manager in a wholesale broker shop, back in that time where The Big Short was filmed. Those examples where you saw people in a bar and like, oh, well, this she works here and makes $200,000 a year. Like, that's the kind of stuff that was actually happening. Jamie, I didn't do that, but that is what you saw happening. And that was real. People think that it was exaggerated.
No,
people think it was exaggerated. It wasn't.
Close. I saw it with my own eyes. And I know you did too. Mm-hmm. Our industry is protected now because they made a lot of changes to make sure that stuff didn't happen. Right. And yes, a lot of stuff was blamed on the appraiser, rightfully so. Mm-hmm. The appraiser was scared. I mean, if you lose you have to feed your family. Appraisers make probably the lowest compensation and do the most work in the industry. They have to go, they have to type hours to do one deal to make $375, right? So they have to accumulate a lot of orders in order to make good money. So they're making this little amount of money, they're doing all this work, and if you don't hit the value, we're getting rid of you.
Yeah, that's horrible.
It was a bad time period for them.
I feel bad for them.
Yeah, it was, and who got blamed? We got blamed. The appraiser got blamed. Oh, it was the appraisers, and so we gotta watch over them. We gotta throw AMCs into the mix, and of course, all of us were against it. I was against it.
Who wasn't?
I mean, it was AMCs. Now, and the appraiser's like, wait, the AMC's going to take a portion of our fee? This is bull. We don't want to deal with this, and we're thinking, oh wow, so we can't talk to our appraisers anymore? Mm-hmm. This is ridiculous. This is never going to work. Mm-hmm. It works. Well, the whole process works.
It doesn't work in a lot of cases where your AMC doesn't communicate with you as a loan officer, in which I've had those horrible experiences.
Yes.
So now, obviously, I'm beyond grateful. I've found you, and we've reconnected since you've opened this AMC because I have communication again. It doesn't. I don't need to talk to the appraiser. Honestly, I don't want to talk to the appraiser.
Jamie, I talk to people. Yeah. I talk to my clients on Christmas.
Yeah, I know you do.
You have something you need to run by me. Hey, I couldn't sleep last night. I'm worried about this appraisal. Can you give me a call? I'm going to call you. I don't want that to be the case. I want you to enjoy Christmas. So let's have a conversation if it's going to make you feel better. That is what my team and I pass off to everybody.
They do.
All my clients.
The best.
I appreciate that.
Honestly, all pro MC, the best.
Listen, and nothing, I promise you, as long as I'm still owning this company, will ever change. Because this is the way you're supposed to do business.
If he retires, I'm retiring. No, this is awesome. So realtors, hopefully that this has been a little educational as to the mindset of the appraiser, why, things have happened, and, what we've done to adapt and to work with the laws, which honestly, they're great, in the sense it did protect the appraisers, and in the right environment, everyone's happy. And this is the right environment that we've been talking about. I wish I found it sooner, but we found it. And, now everything is good.
We're here now.
Everything is good now. So, well, I think this pretty much wraps up. Is there anything else you wanted to share?
We could go all day. So.
I know we could go all day.
Look, I'm always here.
Yeah.
If any of your listeners or viewers or you or anybody have a question that they want to ask me, you know me. I'm always here. Just reach out to me.
Yeah, realtors, if you want to if you want to schedule an office meeting, Keith,
I have no problem.
Keith
I'll
has
be there.
offered very graciously
Absolutely.
to come, sit down with any of your teams to, answer questions, help
Realtors have the
facilitate
best questions, by the way. So,
yeah.
I mean, they really do, and it does get very informative. So whenever you need me to do that, or if you guys want me to come in, I'm 100% in.
Thank you, Keith.
Absolutely.
That's great.
Absolutely.
All right, I guess that wraps it up for now. Thanks for listening. We'll see you guys soon.
All right. Thank you.